Let's get a business update now, and joining us is Evan Lucas from InvestSMART. Evan, good to see you. As always, now the markets have surged over the last couple of days. It came off that low base after Omicron started emerging, so it's bouncing back, which is a relief for investors anyway. How long is that going to last?
That question is a great question because this time of year is always a little bit strange. And why I say that, there's always referred to quite sort of neat and tidily as the Santa Claus rally. And that is basically normally, if you look at history over the last 30 years, tends to start around about the 5th of December and then goes through for about 15 days, normally to about 2 or 3 days before the Christmas period, and then goes very quiet. And why I say it's almost got no rhyme or reason, we've seen pretty much, if you look back at 2018, where the US markets were absolutely tanking, all of a sudden out of nowhere they rallied 24%. You can go back also to 2009 when we had the very end of the GFC and all those things. So part of it is probably that set and forget where people are clicking in. We're still about 3% down from the peak of the all-time high we reached in August. But yes, it's nice to see, and it is, as I said, it is around the idea that it's finishing off the year. A lot of investors will basically take most of the 20th through to about the 12th of January off, and therefore they tend to have a position to hold through that period and doing no much more in their portfolios for that period. So it's a very strange time. Today might be a little bit down, but December historically is the second best month of the year, and so far we're showing that.
Okay, so let's look to next year. What are your expectations? Excuse me, Evan. What's it going to look like?
Yeah. The crystal ball question is always a great question. So the reason next year will be, in terms of economics, will be very good. That is clear. We're seeing all the forward expectations with regards to employment, regards to confidence, our expectations around our future. Economics is good. Markets, however, will probably be asking that question not for what 2022 looks like, but what 2023 is. The reason for that, markets are trying to be 12 months ahead of where they currently are, and that therefore brings in different questions. 2023 will be the year that probably we have to stand on our own 2 feet as an economy and as a business or as a market. It'll also be a year that's probably being very highly discussed around interest rate rises and what that actually means for homeowners, what that actually means for banks, and therefore, again, what the market does. So that question will probably come really strong in around about June. Next year also, domestically, federal election, there's at least 2 state elections. All of those things will also start to impact on what 2023 could actually look like. So next year, the question is, what is 2023 looking like for markets? And I think they're going to ask some serious questions because at the moment, our run rate is about 20% in the US growth. And in Australia, it's around about sort of 11.5 to 15%. That is almost double the normal averages that they do. So you can't expect that to be sustainable.
Okay, so just get back to the other question we were talking about there, Evan. So you got the portfolio over the Christmas break. You just do you park that off to the side and just go and enjoy yourself, not worry about it?
Look, in terms of investing, you should always be looking sort of 3, 4, 5 years ahead. So you sort of can, inverted commas, park it to one side. But for someone like me, I can't not. I'm always watching and always listening to what's going on with markets.
It's just fun.
They do go very quiet. So that's the only thing I will say. They do go very, very quiet very quickly in that week leading up to Christmas and then just past New Year's.
All right, Evan, good to see you. We'll talk to you soon.
Thanks, Pete.